Okay, what's up everybody? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And as usual here, I have another live option trading video for you to watch. This is something I put together every single week where I show you all the trades and adjustments I made over the past trading week, basically Monday through Friday. Now this week in particular was definitely pretty interesting because we finally got to see some pretty significant downside pressure in the market. And I will talk a bit more about this later in this video, but real quick, if we go to the SPY charts, this is an ETF that tracks the S&P 500. And so I'll zoom in here a bit. And this in particular is what I'm talking about from this past week. We essentially got a very nice continuation, a very significant continuation of the downside moves we were seeing from last week as well. Now I will say from top to bottom here, from the all-time high down to the low of this candle, the S&P did drop around 5%. It's definitely not a huge deal. But since this was the first time we saw a drop of this size in many months, it was rather significant. And like I said, I'll talk more about this later in this video, but in summary, this mostly had to do with fears surrounding Evergrande Group, which is one of China's largest real estate developers. But ultimately, it was this fear and the resulting sell-off that occurred that makes for a great opportunity for option sellers like myself. So even though today, for example, is not a super great day for me in the market, I'm down by about $300, not a huge deal. But overall, this past week was very good. This portfolio did generate a net profit for, I believe, the 8th week in a row. So keeping the win streak alive here. And so also in this video, you're going to see two new trades I put on. One in FCX, which I already took off yesterday for a nice profit. And then also my latest trade in Peloton. So you're going to see those and also how I've been managing my other positions. I've definitely had to make some adjustments to a few of them. Mostly having to short shares of stock as the stock price has been dropping below my short put strikes and things like that. But before we do get started, as always, in case you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. And so with that being said, I'm going to stop here and play a few clips that I recorded from earlier this week that will show you those new trades in FCX and Peloton in real time. And of course, my thought process and my analysis behind both of those new trades. So let's get started. Okay, today is Monday, September 20th, and the stock I'm looking at here is FCX, which is Freeport-McMoRan Inc. This company is involved in the mining of materials like gold, copper, silver, etc. I have traded this stock before, and I will do so again today, because if we zoom in here a bit, you can see that one, this stock is down very hard today, and also in the recent past, and then also we're seeing a massive explosion in implied volatility, and therefore a massive increase in the prices of the options on this stock. So we're seeing an IV rank of 68%, that's very good, and an IV percentile of 79%, very good. And then also just in visual terms, you can definitely see that the implied volatility right now for FCX is certainly on the higher end over the recent past. So this is a great opportunity to step in and start selling options. And so now what I'm going to do here is let's back out a little bit. I'm going to go to my drawing tools and we'll go to this trendline tool right here. And let's draw in a potential support level right around, I would say here. Draw it over and there we go. And then once more, let's go back to my tools and switch back to my cursor. I'll zoom in here a bit. So I do think there is some pretty major support right around this price, which is almost exactly $30 per share. You can see in the past, there were many points where the support level was significant. For example, right here on March 25th, it looks like FCX came down, bounced right off that level. And then also back here as well. You can see back in this zone, the stock did break above that price and kind of teetered around that support level for a few days, basically repeatedly testing this level to see if it would hold. Ultimately, it did fail for the short term, but then FCX did recover, broke back above that support, came back down, tested it, and finally it did hold, and boom, it shot right off that. And now take a look, I'll zoom in a bit more, take a look at where we are today. So once again, FCX is coming back down lower, getting very close to that support level. So what I would like to do here is step in and sell some put options. Take advantage of this down move combined with a likely bounce. That's what I'm hoping to see off the support level. And of course, also the very high implied volatility. So let's go into the trade tab now. I'm also still in the October expiration cycle, 25 days left to go. The reason why I'm not in November yet is because you can see down here, the November cycle is still 60 days out. That's a bit far. And also this stock does have earnings very soon after the October expiration date. So ideally, if I can, I want to make this trade here. And if I need to, I can hold these put options all the way to the expiration date. And then a few days after, if implied volatility is still pretty high for the stock, I can place a new trade right before the earnings announcement. And for that one, for that earnings trade, I would choose the November cycle. Now my choices here for the put options, I'm looking at either the 30 strike puts or the 29 strike puts. And for this trade here, because implied volatility is so high for this stock in particular, relatively speaking over the past year, that's why I'm willing to go a bit closer with my strike price and collect a heftier credit. Basically, I'm willing to be a lot more aggressive on stocks with super high implied volatility, high IV ranks, and high IV percentiles. So let's go ahead and click on the bid price for these 30 strike puts. That brings up the order down here automatically. I'm going to sell 3 of these contracts, and we'll see if I can get filled maybe at $147 per contract. You can see the bid and ask prices here are very, very tight, so I might have to go down to the bid, which just actually increased a little bit. But point being, because the spread here is so tight, that's actually a good thing. So as a result, I know I'll still get filled at a pretty good price. So actually now I'm going to come up to $150 per contract, go to confirm and send. Buying power effect is $1,600, that's fine, and we'll go to send. And there we go, just got filled at $154 actually. I got price improved a little bit. Great, so now I'll come back to the trade tab and finally set up my buying orders to buy these contracts back should they drop in price enough and reach my profit target. So you can see down here, this is the buy order. I'm going to buy back all 3 contracts, and I'll do so for half price. So half of 154 is 77. We'll make this a GTC order, so it's always in place, and then confirm and send, all done. And then one more thing I want to mention in this clip here, if we come back to the monitor tab and I scroll down here, you can also see I did short 300 shares of EWZ this morning as well. This ETF, along with the entire market actually, let's go to EWZ real quick. You can see this ETF is down once again very, very hard. I'll zoom in. So this is now the 1, 2, 3, 4, 5th day in a row that this ETF has moved down, and also by a significant amount. And so unfortunately, EWZ is now below my short put strike of 33, which is right around here. So as with all my positions that do have short puts involved, as you just saw with my new FCX trade, I will short shares of the underlying stock should the stock actually keep falling and then eventually fall through my put strike. And in doing so, this has the effect of covering my obligations on the short puts should the stock stay below the strike all the way through the expiration date. Right, for example, in the case of a naked put option, let's go to the trade tab so you can see this more clearly. So again, my short puts are at the 33 strike. And when you sell put options, and if the put option expires in the money, then you will very likely get assigned on the contract and have to buy shares of the underlying stock at the strike price. And this can be dangerous if the stock does fall extremely far below the strike price by the expiration date. Because let's say, for example, EWZ fell all the way down to $25 per share by October 15th, then what's going to happen is I will have to step in, or basically I'll be forced to buy shares of this ETF at a price of 33, and then if I wanted to just get rid of those shares afterwards, I could only sell them in the market for a price of 25. So that would be a loss of $8 per share, and because I sold 3 of these contracts, that equates to 300 shares. That would be a total loss of about $2,400, minus the credit I received for selling these puts in the first place, but that would only amount to be a few $100. So in the end, the loss would still be over $2,000 for sure. However, that's only if I sold these put options as naked put options and then did nothing to protect myself if the stock did fall all the way through my strikes. As I just showed you, I shorted those shares, 300 shares to be exact, right when EWZ breached my put strike. So now at this point, it does not matter how much farther EWZ drops in price. Because even if this ETF goes to 0 by October 15th, if I shorted the shares right around $33 to begin with, and then I get assigned on these puts and have to buy the shares back at $33, I'm not going to make or lose any money on the stock. Although I will say because I shorted these shares a few pennies below 33, that means I will actually lose a few bucks if this scenario does play out. But those few bucks in losses will be more than compensated for by the total credit I collected by selling these put options. So in the end, what that means is I would still have a total net profit. So that's what's going on with my EWZ position, and I'll do the same exact thing should my FCX position, my new one, turn south today or any day going forward as well. With the stock right now at $30.86, that's pretty close to my 30 strike puts. So I will keep a close eye on this stock, and again, should it drop below $30 per share, I'll step in, short 300 shares to cover all my obligations on the 3 contracts I sold, and therefore still have the opportunity to make money even if this stock goes to zero. Okay, today is Wednesday, September 22nd, and the first thing I want to point out here in this clip is a price action chart of SPY. This is basically the S&P 500, and if we zoom in here a bit, you can see especially this past week, we've had a massive down move. And it seems the reason behind this massive down move has to do with China, specifically Evergrande Group, which is one of China's largest real estate developers. There's fears around them defaulting on their debt, and that might have a chain reaction in other parts of the world, also in the US as well. Now, whether or not those fears are actually realized in the near future, we'll find out, but it seems today the market is recovering a little bit. SPY is up by just under $4 at the moment, which is just under 1%. And the reason why I'm pointing this out is because if we now go to the VIX futures charts, and in case you don't know, the VIX futures will show you the implied volatility for the S&P 500. And whenever the market experiences a pretty violent sell-off, you will almost always see a pretty massive expansion in implied volatility. So this bar right here in particular illustrates the peak of the fear from this past week. And now, since the market is recovering a little bit, implied volatility and therefore fear is starting to go back down. And it's moments like this that are hugely advantageous for option sellers, because when implied volatility explodes like this, option prices pretty much across the board, across the whole market, increase significantly as well. And this is when option sellers can then step in and start selling those super expensive options, knowing that the vast majority of the time when fear is introduced into the market like this, it usually does not last for very long. So once people calm down and implied volatility starts to contract, that's also going to reduce the prices of options across the board as well. So essentially the game here is selling options when they're very overpriced in moments like this, and then buying the contracts back at much lower prices down here and making the difference as profit. And so far today, we are seeing the biggest down move of implied volatility, and that's why if we come back to the monitor tab here, you can see my P&L just for today. That's why it's looking pretty darn good. And again, that's because all my positions here are short option positions. I sold options and took advantage of the increasing implied volatility over the past 2 weeks or so. And now we're finally seeing all that fear and all those inflated prices coming out of the market. So I just wanted to take a second here and explain how this works so that you do have this understanding in regards to an option selling strategy. Implied volatility, especially high implied volatility, is your best friend as an option seller. If you can be patient and wait for moments like this, chances are you can make a lot of money if you know what you're doing. Now, one more thing I want to look at here before wrapping this clip up is I want to go to the Peloton Charts. And if I zoom in here, you can notice a couple things. One, the stock is down pretty hard today, but actually the stock is down 1, 2, 3, 4, 5, 6, maybe 7, 8 days in a row. So a very large series of down days for the stock, and also a pretty decent spike in implied volatility, which you can see right here. Now the IV rank at 28% is not bad. The IV percentile at only 31% is pretty marginal at best, but I do also think this stock is now at a pretty interesting level. So if I zoom back out here a little bit, and now we'll go to my drawing tools and go to this one right here. I'm going to draw in a support level right around this price at $94.50 per share. So I'll click and drag it on over. And there we go. And then I'll go back and switch my tools one more time back to the cursor. So you can see this support level does go back quite a bit in time, all the way back to around November of 2020. And you can see in particular once right here, another time right here, and a third time right over here where this support level did hold and the stock bounced off it. There was one moment back over here where the stock did cut through it for a brief period of time, but Peloton did recover very quickly and resume right back above it. So I do also take this situation right here as an indication that the support level did not want to flip to resistance quite yet. And now once again, zooming back in, look where Peloton is today, touching that support level once more for the 4th time, actually the 5th time. And so at this point, I do think this would be an interesting level to start buying the stock. Who knows, this could be the time where the support level does break and actually flip to resistance for the next few weeks or months. But trading, of course, is all about just playing the odds. What is the chance of you being correct on a certain trade? And obviously, you want the chance of you being correct to be more than 50-50. So given that we've seen so many down days in a row for the stock, and also now it's touching a pretty major support level, combined with the fact, of course, that I'll be selling an out-of-the-money put option, which in itself does have a pretty high chance of success, all those things together do give me a pretty high probability of turning a profit on this trade. So what I want to do here is if you go to the trade tab, and we'll go into the October expiration cycle, only 23 days left to go. I am pushing it a bit here with this expiration date. I don't want to go to November yet with this stock because Peloton does have earnings not soon after the October expiration cycle. And that is going to be a separate trade I want to make on Peloton. So in the October cycle here, I'm thinking of selling the 92 strike put option. It has a 37 delta, so it is rather bullish. And the premium on these options is still very high, especially with only about 3 weeks left to go to the expiration date. Now, before I can make this trade though, I do have to take off an existing position I have because I do need to free up some capital. So we'll come back to the monitor tab real quick. And so I'm going to replace my FCX naked puts with my new Peloton naked put. Right, this was a trade I put on just a few days ago, which you saw in an earlier clip. And the profits on this position have already come in a huge way. So actually real quick, we'll go back to the charts and go to FCX and we'll zoom in a bit here. So it looks like the support line I drew right around $30 per share held almost perfectly. If I zoom in a bit more, you can see the low on this candle was $30.02. That was the low on this day right here back on September 21st, which was yesterday. So this stock got down to 2 cents above my put strike and then started to bounce off it from there. That's a good sign. So ultimately the bounce we're seeing here combined with a contraction in implied volatility, that's why the profits for this position came in so much in just about 2 days. And even though I have not quite hit my profit target yet, I am extremely close. In fact, let's go to the FCX order I have in place. You can see it right here. My limit order is set to buy those contracts back at $77 per contract. And right now they're trading for about $88 per contract. So that's definitely close enough for me to take this position off a bit early. So we'll go to cancel and replace, and we'll try and buy these contracts for the best price possible. Let's see if I can get filled around $90 per contract. Confirm and send, send. And there we go, just got out at $89 per contract actually. So that's great, but one final step is to come back to the monitor tab and cancel my hedging orders that I have in place on that position. Specifically, if FCX did breach my put strikes, these orders would be in place to start shorting shares of the stock and then also buy them back if FCX did recover and go back above my put strike. So I just have to go to this one here, which is the current working order. You can see it right there, and right click and just go to cancel. And that will cancel all the orders that are dependent on that one. And now having done that, I have freed up enough capital to put on my new Peloton trade. So we'll come back to PTON and then go back to the trade tab, and we'll go ahead and sell one of these 92 strike put options, just one contract. So the bid price is 405, ask is 420. That means going right in between. The fair price for this put should be somewhere around 412 or so. And actually the asking price just changed a bit, so I'll come up to 415 and see if I can get filled there. We'll go to confirm and send. Buying power effect is $1,500. That's fine. So we'll go to send. And there we go, just got filled at 415. Awesome. And then last up, we'll come back down here and click on the ask price now to bring up a buy order. So this one here is going to be my profit taking order if I am correct on this trade. So we're just going to buy back the one contract, 92 strike put option, and I'll do so for half price, if of course the option ever does get down to that price. So half of 415 is about 207. I'll come down to 205 and then make it a GTC order and confirm and send, all done with Peloton. Okay, I'm back one more time, still on the same day, Wednesday, September 22nd. There's actually one more thing I want to show you here, and that is I did also take off my WDC Strangle for a profit this morning as well. I simply decided to do it a bit after I filmed that Peloton trade. Now there are a few extra orders here by mistake. I accidentally tried to buy back 2 Strangles in WDC. It should have just been 1. So that's why you see 2 buy orders for a WDC Strangle and 1 sell order. I had to, of course, get rid of 1. So essentially just focus on these 2 orders right here, where I bought back my 80 strike call option and my 60 strike put for a total debit of $468. And then I also bought back the stock I shorted a little while ago for a price of $56.49. And the reason why I did have to short shares of the stock is because, if we come back to the charts real quick, so you can see this in a visual way, and I already have WDC pulled up. Let's zoom in a bit. So again, keep in mind, my short put strikes are at 60, which is right around this level that you can see here. And so once the stock fell below my put strike, I had to short 100 shares of the stock. And in doing so, cover my obligations on the short put. Right? Because when you have a position that consists of a short put option and short 100 shares of stock, then no matter how far the stock drops below your put strike, it does not matter, because the profits you'll make on the short stock will totally cancel out the losses on the short put. And in the end, all you're left over with is simply the premium that you sold the put for to begin with. That's your profit. And then of course, also in my case, I do keep some of the premium for that call option, which as of right now is way, way out of the money. So essentially how this trade fully worked out, let's come back to the monitor tab real quick and we'll go to the calculator. So originally I sold this strangle, the 80 strike call and the 60 strike put, for a total credit of $345, $345. And so because the stock dropped below my put strike, that's actually going to be a losing situation, at least in regards to the options. So that's why when I bought this strangle back, I had to do so for a greater debit. So if I sold these options for $345 and had to buy them back for $468, that's a loss of $123. Not a huge deal, but still a loss. However, I also shorted 100 shares of WDC right when it breached my short put strike. And so I'm going to clear the screen here on the calculator, but don't forget this number, 123. And so in particular, I shorted those shares at a price of $59.47. So very, very close to my put strike at 60. And then also, as you can see, I bought those shares back this morning for a price of $56.49. So we subtract from this $56.49, which leaves a profit of $2.98 per share times the 100 shares I shorted. And the total profit is $298. And then lastly, from this, I subtract the $123 I lost on just the options. And in the end, I still walk away with a net profit of $175. And this was actually the profit I was targeting initially, right? If you've seen my other option trading videos, or also in this one as well, you've seen that I typically take my profits at 50% of the total credit received, or I should say of the initial credit I received. And as I explained, the initial credit on the strangle was $345. And if I divide this by 2, because again, I take my profits at 50%, that means my real profit target was trying to make $172-ish. So in actuality, I did walk away with a few more bucks in profit, but still very close to my original profit target. And so there you go. I just wanted to take a second and explain exactly how this works, because this approach is exactly how I've been turning losing positions into winning positions. If my short puts get breached, I short shares of stock. If my short calls get breached, I buy shares of stock. And so far, this method has been working exceptionally well. I've gone about 8 weeks at this point without having a single losing trade. Of course, that's not my expectation into perpetuity. At some point, yeah, I will have losing trades. It's part of the game, but still having a winning streak of this length, I think definitely proves the fact that this method is very, very effective. Okay, welcome back. I hope you enjoyed those few clips. And so now let's go over my current positions and we can see where everything is at today. So beginning first with my JD position, this was initially a naked call position where I was just short the 82.5 strike call. But if you have seen my previous live option trading videos, then you will have seen I did have to make an adjustment on this position and sell the 72.5 strike put. The reason being was I wanted to take in some extra credit on this total position because I did lose a bit of money from having to use the stock as a hedge. Right, there were a few times where the stock breached my short call strike, went above 82.5, then fell back below, and then kind of repeated that process a couple of times. Right, so basically if we come back to the charts real quick, and we'll go to JD, and then I'll zoom in here a bit. So in particular, it was back in here where I had to make those adjustments. My call strike again is at 82.5, so right here, and there were just a couple times where the stock did pierce through that price. And like I was saying, every time my short calls get breached, I buy shares of the stock. But if the stock does reverse and fall back below, I will have to get rid of those shares and will do so for a very small loss. But sometimes those losses can add up if this happens many, many times. And again, that's why I did sell my short put option at the 72.5 strike to take in extra credit as compensation for those small losses. And it's definitely a bit unfortunate because the whole point behind this trade was I did note this resistance level in red that you can see here. My initial assumption was as JD was climbing higher, I did think it was going to get repelled off that point. And even though it did pierce above that resistance point just for a few days, of course, what ultimately happened was the stock did eventually go all the way back down like I thought it would. The good thing, however, is I have not had to make a single adjustment to this position since then. So basically the stock is just bouncing in between my short put and short call strikes. Not a big deal. I just have to continue holding onto this position and waiting for time decay to do its thing. Just slowly eat away at the value of the options I sold until I can buy them back for a much lower price and walk away with an overall net profit. And as you can see here with the P&L year to date on JD, this is the only trade I've made on the stock this year so far. And as you can tell, still down in total by about 66 bucks. So I have made a lot of money back, but I'll still need to hold onto this trade likely all the way until the expiration date, which I believe is 3 weeks away. Next up, we have my two short put positions, one in EWZ and one in Peloton, which I put on yesterday. Now, a few days ago, I did have to short 300 shares of EWZ because it did fall below my 33 strike put option. But if we come to the charts real quick, go to EWZ, even though this ETF is down today, it has definitely rallied back above my short put strike. Although right now with the price at 33.46, it's definitely getting pretty close again. So in summary, once EWZ did break back above my short put, I did have to buy those shares back and remove my hedge. So until EWZ drops back down below 33, if it ever does again, nothing more to do on this position. So with that said, let's come back to the monitor tab. Next up, like I was just talking about, my Peloton short put options. Again, if you recall, they're at the 92 strike. And so far today, we are down just about 15 bucks on this one, but still up overall on the trade so far. So very briefly, if we come to the charts and go to Peloton, you can see where this stock is at. We'll zoom in a bit. And unfortunately, it definitely seems we are, for the time being, breaking down below this support level. Now, of course, the support level I drew here is not exact. Right now, I have it pinned at around $94.50, somewhere around there. But who knows? This is not a perfect science. The actual support level might be a few dollars below that. I can't say for sure. But point being, this candle here today, with the stock breaking down below my personal support level, doesn't mean a whole lot yet. It's still above my put strike. It's not that far below my support level. So until I see the stock really starting to break down and going down significantly, I'm not going to change my assumption on this trade. And also I will mention, if we come down here, the implied volatility for the stock has definitely contracted a little bit, at least since I put on this trade. And that is helping by a small amount, but still definitely helping my position. Next up, we have my Alibaba short strangle, which is definitely the one trade right now that is giving me a hard time. As you can see, I'm still short the same options. I have not had to adjust my strikes yet. Still short the 150 strike put and the 190 strike call. But this morning, as you can see up here, I did have to short 100 shares of the stock at a price of 147.58. So ideally, I wanted to short these shares as close to 150 as possible, as close to my put strike as possible. But because this stock gapped down overnight, or I should say pre-market, that's why when the market did open, the best price I could get filled at was 147.58. So what this means is if the stock does reverse, if it does go back higher and break back above my put strike, like what you saw with my EWZ short put options, then I will have to buy these shares back and at a price of roughly around 150. So ultimately, if I short the shares at 147.58 and potentially buy them back at around 150, that's going to be a pretty hefty loss of over $200. That being said, my net credit on this Alibaba short strangle is still very high. And that's why I have not changed my strikes as of yet to take in extra credit. Even losing that $200+, I will still have a total net credit of over $300 on this position. And that is still in line with my profit target. But so far this morning, my short stock hedge has definitely been helping quite a bit. You can see on just my put option here, the money I've lost just on the put today is about $300. However, you can see right above it, I've made over $200 back just from the short stock position. And because I'm short the full 100 shares of Alibaba, that means this stock could go to zero by the expiration date, and I could still walk away from this trade with a nice profit. But I will definitely have to be in this trade all the way until the expiration date, which is on October 15th, about 3 weeks away. Next up, we have just two more to go over. We have my Las Vegas Sands short strangle. This is a trade I put on last week. I sold the 36 strike put options and the 44 strike calls. And this one also gave me a hard time because if you go to the charts real quick and go to LVS, and I'll zoom in here a bit, take a look at what's been happening right around here, right at my put strike. So this stock unfortunately has been repeatedly bouncing through my put strike again and again and again. And like I've explained, that's been causing me to lose a little bit of money every time that happens. And so far, I've lost about half of my initial credit on this position. So if this happens one or more times, then at that point, I will have to come to the trade tab here and start adjusting my strikes. So for example, if LVS drops back down below my put strike and then bounces back, causing me to lose another 30 or 40 bucks or so, at that point, I will have no choice but to come over here to my call option and roll it down. Essentially buy back my original call option and then sell a new one closer to the stock price. And in doing so, I'll take in a net credit. And as I said, I can use that additional credit to compensate or offset the small losses I incur whenever having to use the stock as a hedge. So I'll just have to wait and see if that happens again. But nothing more to do here. Let's come back. And then finally, we have my NUE short strangle. And this one I've had on for a little while at this point. I'm still short the 110 strike put, 120 strike call. And also I've been short 100 shares of the stock for quite some time as well. And that's because, coming back to the charts one last time, go to NUE, this stock is still well below my put strike. Right, again, my puts are right around here at 110, and the stock is still all the way down at just under 102. So needless to say, shorting the stock has definitely saved my butt on this position. Otherwise, I would be down by a lot of money, especially when you also consider that implied volatility for the stock is still very, very elevated. I don't think it's come down really at all since I put on this position. But nothing more to do with this position except just to sit on it all the way until the expiration date, most likely, because I still do have a pretty nice net credit overall on this position. But the only way I'll get to keep all of it is, again, by waiting till the expiration date. And so with that being said, I think that's going to do it for this video. I've already checked my watch list earlier this morning, could not find any new stocks to trade today, and that's likely because implied volatility is now back down to a pretty low level. Let's check the VIX futures real quick, and yep, exactly, there you go. So this is now the 1, 2, 3, 4th day in a row where the VIX has come down pretty significantly. And now as a result, it's going to be a lot more difficult to find new stocks with high implied volatility and therefore high option prices that are actually worth selling. But overall, this was another very good week. The winning streak continues now at 8 weeks in a row, which is very cool, but we'll see how long it lasts. But bottom line, I am very encouraged now with my trading strategy, now that I finally think I'm getting things pretty solidified, and I'm getting a lot more experience with this new approach of using the stock as a hedge. So I will continue to paper trade for a bit longer. I just want to get a bit more experience under my belt before I finally switch back to real money again. And so with that being said, thanks so much for watching. I hope you enjoyed this video, and definitely let me know your thoughts or if you've got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.